Hang Seng, European equities and gold, the winner in the month of February, and the losers are mainly Bitcoin, Nikkei 225 in Japan, Nasdaq, and technology. Welcome to Spot the Markets, our monthly edition for February 2025 by Marcello Zanardo, CEO, Mercury Partners Academy. So as you can see, February was a month where markets corrected, mainly in the US and mainly in the technology space. And these led to some clear winners also year to date with some rotation. Hong Kong equity markets, Hang Seng was the best performing in the month. And we have finally Europe coming to be a winner year to date, with gold still up there. It was a significant fall in Bitcoin and some technology shares, with the main US markets down. If we look at equity sectors, financials, healthcare, and consumer staples, typically defensive stocks, are the top three best performing sector year to date. And we have global tech in last position, followed by consumer discretionary and industrials. If we look at the main news over the last 2 weeks of February, in the last week of the month, we had Germany's election with the Christian Democrats winning election and the far right not getting as many votes as expected. In the week, the Dow rose by almost 1%, but both the S&P and especially the Nasdaq Composite were down. And in the previous week, we had Vice President Vance attacking Europe from the threat from within. And then we saw that the president of Ukraine was received at the White House, and he was given some strong ultimatum in ending the war and other topics. In terms of companies and news flows, looking at the main stocks, Nvidia earnings weren't enough to continue the optimism, and the shares fell on results by almost 9%. If we look at Tesla had a terrible January in Europe, as its sales fell 45% in the region year over year. There are different reasons behind this. The auto sector, with Stellantis continuing to underperform and to fall on a weak outlook for growth and profitability. Intel speculation that it could be broken down by two rivals are continuing to fueling outperformance and speculation. And if we look at the retail, Walmart, the retail giant, posted strong profit and revenue for the holiday quarter, but investors were unsettled by weaker than expected guidance. If we look at the week ahead, this week, we already had a release on Monday and Tuesday. By yesterday, Tuesday, the 4th of March, more than 95% of the S&P companies have reported fourth quarter results, with roughly 3/4 beating earnings per share estimates and around 60% surpassing sales projection. And yet we had a correction on the main US equity markets. This Friday, the Bureau of Labor Statistics will release the jobs reports for February, with economists forecasting 155,000 increase in non-farm payrolls. Keep following Mercury Partners Academy on all our social. And if you're interested to join our internship, go on our website, mercurypartners.net, on the employment tabs. That's all from me, Marcello Zanardo. All the best. Thank you.